Synthetix, one of the very first decentralized finance protocols, suddenly finds its revival. The vast majority of altcoins went down this week, but SNX is going up. The question is why? Who's buying here? Who's selling here? Let's have a look at the on-chain metrics, the data most people are not looking at. The hype is all about a launch of a new perpetual futures blockchain. The perp market, so the market to bet on rising and on falling prices with leverage, that market is growing very, very quickly. Here is the trading volume over time. It all started out with Hyperliquid, and then came the competitor Aster. Aster is supported by CZ of Binance. So more and more people are betting on crypto prices with leverage. They're not buying directly anymore on the spot market. And so Synthetix is joining the party. There's a $1 million Ethereum mainnet event scheduled for October 20th. But let's have a look at whether or not the AI is correct here. Do we actually see accumulation by the whales, or do we actually see a short squeeze? Now, as mentioned, Hyperliquid is currently leading the market. There are 8.3 billion worth of bets on the platform. The total value locked is 5 billion. So the average investor is slightly less than 2x levered. There was a 24-hour trading volume of 9.5 billion. Aster is at number 2 in terms of total value locked and open interest. There is more trading volume though because of an airdrop incentive. But let's get back to Synthetix. We are currently at $2.20. The market cap is at 780 million. It peaked at close to 4 billion. The total value locked, so the capital that's in the protocol, is only 300 million. That peaked at 3 billion. So there is quite a bit of correlation between those two charts, as in when the protocol is getting used more, then of course the token price of SNX is going up as well. The protocol revenue has declined a lot recently. The fully diluted market cap went from close to 10 billion all the way down to our current valuation. So more on that in a second. And unfortunately, the value of the treasury diminished together with the revenue of the protocol. Now here's the thing, price discovery is always a function of demand versus supply, and obviously demand has gone down quite a bit. The issue is that historically the supply at the same time also grew a lot, and so that's a problem. An increasing supply with a decreasing demand means underperformance. Here's the number of floating SNX tokens over time. It grew very aggressively from just 1 million all the way to more than 100 million. And when the supply more than 100x's, then it's no surprise that SNX relative to other altcoins went down by 99% in the span of less than 4 years. This should be a lesson to everybody that invests in altcoins. Please check the tokenomics of the project. Check how quickly the supply expands over time. But here's the silver lining, and it might partially explain why Synthetix is now rallying. The circulating supply is at 343.5 million SNX. There's only less than 500,000 tokens outstanding. So there's no more relevant release of additional tokens in the future. And so that then helped the price rally recently. The main problem that the project recently had is now gone. That's why Synthetix was able to outperform by almost 300% in the last few days. But of course, it's all speculation. It's all the hope that perpetual futures trading on Synthetix will take off. Now let's see if the AI is correct. Are whales really accumulating, and is this a potential supply squeeze? We've got tokens on Ethereum and we've got tokens on the Binance Smart Chain. So let's first look at the data for Ethereum. On the left side, we see the number of wallets that have at least 500 SNX. So at the current price, that's roughly $1,000 worth of the token. In the middle, it's 5,000 tokens, so $10,000 worth of the token. On the right side, we go another 10x, so it's now $100,000 worth of the token. We can indeed see that the recent rally was mainly driven by the whales. The number of whales, relatively speaking, grew faster than the number of retail investors. The data on the Binance Smart Chain looks slightly different. However, here the number of holders is much smaller. So the number of retail investors is only close to 300. That's less than 1/10 what we have on Ethereum. There's also very few whales on the Binance Smart Chain. So really, the price discovery happens on the Ethereum chain, not on the Binance Smart Chain. Now, besides the spot trading directly on-chain on Ethereum, we've also got the derivatives market. And since perpetual futures are growing faster and faster, we have to look at that data as well. In the last 24 hours, we only saw 162 million worth of trading volume on the spot market on Binance. Compare this with the perpetual futures market. Here we had 1.3 billion worth of trading volume. So really, the perpetual futures market become more and more of a relevant player within crypto. The vast majority of perp traders bet on rising prices over time, as in the funding rate tends to be positive. The longs have to pay the shorts. And recently we had the massive shakeout in crypto where most altcoins went down 60, 70, 80%, which created a lot of trading volume. But interestingly enough, the recent trading volume in Synthetix is even larger than that shakeout. Is this a good thing? Is this a bad thing? I tend to believe it's not that great, because usually we do have some correlation between trading volume and price. When the trading volume is high, the price tends to be high. When the trading volume is low, the price tends to be low. And currently trading volume is extremely high. There's a lot of attention on Synthetix. But even more important than trading volume is open interest, as in how many bets are currently made on the token. And that has spiked massively. We are now close to 180 million worth of open interest. And in the past, we only had been between 30 and 90 million. And again, there is some correlation between the two numbers, as in when there's more open interest, we tend to be high in the price. When there's less open interest, we tend to be lower in the price. And now seeing record high open interest is not necessarily that great. Now, I don't think just because attention is high and because a lot of people bet on the price now, that the price has to decline very quickly. Because the reason why the token did so much worse compared to the average was token inflation. And the token inflation is now gone. Really, we have to have a close eye on what's happening now with the platform if we do see some adoption. Some whales think there will be, because more whales are now currently buying than the small retail investor. And I tend to follow what the whales are doing, because the whales tend to make better calls. Crypto is a game of both luck and skill, and the longer we play the game and the more skill we have, the more the capital will concentrate towards the smart players, towards the whales. So when the smart players, the skilled people, they bought in the most, they're buying much more than the retail investor, then probably they know something that most others don't. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much, much faster compared to the movements to the downside. We shoot up and then over a long time, we trickle down. Here's the example of Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up. This was the announcement of the dinner. And then subsequently, we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc. that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just well stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those 2 videos, you join the community, afterwards I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position, and if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.